We have so much debt now that the only way that we can finance it is if interest rates stay at ridiculously low levels. But ultimately, as inflation rears its head.
Hello there, my friends. Chris Marcus here with you for the Stock Pulse Network. We are at the New Orleans Investment Conference and really excited to have a special guest. Peter, I'm guessing you didn't know this, but you were my introduction to Austrian economics when I was still drinking Keynesian MBA Kool-Aid, and without you, wouldn't be here.
Yes,
and
I'm clearly older than you, so yes.
Yeah, so it's a pleasure to have you here, and welcome to the conference. And how's everything going so far in your visit here?
Well, I just got here today, so I haven't been here for that long, but I've come here every year. I'm not sure how long you guys have been coming. But
this is my first one here. But
yeah, but it's a great place for a conference. I love the city. Great food here.
Yep.
Always go home a little bit heavier than when I arrive.
Well, that's the jambalaya will do that.
Yeah, but and there's some good people here too. A lot of people that I see. Some of them I see once a year. Some of them I see at other conferences. But it's a good event, and so I'm happy to participate.
Right on. Well, it's great to have you. And again, I became familiar with your work back in 2009 with those great Peter Schiff Was Right videos. And amazing to see in this past decade how so many of the things that you talked about have really been playing out. Now we see Russia dumping treasuries and petro-yuans being created. So I'm curious, what's your current take on how this is all developing and certainly where the gold market is headed from here?
Well, gold has, really been an asset that has been under-owned for many years. I think you have too many people that are convinced that the central banks know what they're doing and they've solved all of our problems and that there's no inflation and that there's nothing to worry about and therefore there's no reason to own gold. It's just a piece of metal and why own it, right? It doesn't throw off any income. But of course, people are completely wrong. I mean, all of this complacency is, what was going on, before the 2008 financial crisis. But, at least back then, if you go back to the days or years leading up to the 2008 financial crisis, gold was going up. Gold hit a record high in the summer of 2008. It hit $1,000 for the first time. And so at least as people were oblivious to those problems, they were at least buying gold. I mean, they knew enough to do that. But now, people have been selling gold. You actually got a lot of funds that are short gold.
Right.
And gold bottomed out, in December of 2015 when the Fed started to hike rates. And everybody expected gold to fall, and of course it didn't fall. And it's, now a couple $100 an ounce higher. But the key is to take out that high of 1900 that we hit in 2011 when the Fed showed their cards and came out with the quantitative easing program.
Right.
It's just that everybody thinks quantitative easing is over. What they don't realize is it's barely begun. The next round is going to be bigger than the first three, and that's really what's going to send gold to new highs.
And it's interesting about the quantitative easing because Jerome Powell was questioned in Congress a couple months ago, and I haven't heard anyone else mention this, but they asked him about his definition of normal, which isn't going back to the pre-crisis levels, but he said taking that balance sheet down to 2.5 to 3 trillion over the next 4 years, which probably means that it's never going to come close to happening. So it's really not been a tapering quite as has been presented in the media.
Well, the balance sheet is still north of 4 trillion, so they've tapered it a little bit. I think a couple of $100 billion has, been allowed to bleed off. Right. But obviously you can see, today the 30-year yield hit a new high for, I don't know what many years it is, 8 years, 7 years, something like that. But rates are rising and the Fed still has an enormous balance sheet. And according to what they've been saying, they're about to start increasing the monthly draw.
Right.
And that is going to put even more pressure on the bond market, especially since we are printing record budget deficits. We're now borrowing over $100 billion a month. And the official numbers don't even capture that because so much of the budget is off budget. But it doesn't matter what they want to pretend. They still have to issue the bonds to finance the off budget spending. So what's important is how much the national debt is going up, not the official budget deficits, but how much bonds are actually being sold. And so we've got record budget deficits, And now we've got the Federal Reserve that wants to sell. And the bigger problem is who's buying?
That's what I've been wondering.
Well, because the Chinese used to be buyers, and the Japanese, and the Saudis, and the Russians, but they're sellers. Everybody can't be a seller. I mean, somebody has to step up and buy, but who? You know?
Yeah, and I'm curious your take on the Russian dumping of the treasuries, where, again, these are things that, you know, you've written about and we've heard about happening one day, yet here it is. It's happening. And then we have our other largest creditor. We're launching a trade war against them.
Yeah, that's not too smart, is it?
And if the Fed is really pulling away from the auction, which I take anything the Fed says with a grain of salt, but it seems like a mystery as to who is going to buy these bonds.
Well, it's going to be the Fed. I mean, because the Fed is going to be back. Because if no one else wants to buy, that's what the Fed's going to do.
Right.
And they're going to create the money out of thin air to buy it. That's why gold's going a lot higher, because we're going to have to finance these deficits the old-fashioned way, right, with inflation, just like any other banana republic, because that's what we're going to do. I mean, the right thing to do would be not to finance it and to force the government to slash spending.
Right.
But our central bank has no stomach for that.
No,
You know?
it doesn't seem so. I'm curious, though, when do you think they reverse course? I've been surprised that as it's gone on, they keep saying we're going to keep hiking, and so far they have. Again, if they have any explanation of who's going to pay that interest expense.
You know, to be honest, I never thought they would hike this much. I didn't think they would hike at all. I thought they would recognize that the minute they started to tighten, they would ultimately have to reverse, and I thought that was going to be a big problem. So I thought the best thing to do is never tighten, and now I thought that would buy them more time. But they actually were able to raise rates more times than I thought they could have.
Right.
Without everything imploding. But, you know, that doesn't mean it isn't. It's like, the game where you're pulling the sticks out. You know, I mean, I mean, eventually you're going to pull that stick out, and you're going to hit the one that topples it. I mean, you can't just do it indefinitely. But they've gotten a little bit further along than I thought they would have. So they got to 2.25. I don't think they can get to 3. I mean, obviously that's the direction they're headed, but given how much damage, look at the auto market, look at the housing market. Look at what's already going on with earnings. Look at what's happening with prices and costs, and all these companies warning about rising costs and having to pass on the costs to higher prices. I mean, we're already so far into it, and now I think with the stock market finally starting to go down, real estate prices are about to drop. They haven't fallen yet, but if you look at supply. The supply is swelling of unsold homes that nobody is buying, and that's exactly what happened in 2006, 2007. Before the prices went down, the supply went up, because people who have houses on the market, they're kind of reluctant to drop their prices. They don't want to recognize where the reality is.
Right.
So the houses just sit on the market unsold. And we have the biggest glut of unsold homes, new homes, since 2007. So prices are going to go down, so Americans are going to see their home equity evaporate again. They're going to watch their 401ks go down, and so there goes the reverse wealth effect all over again.
Yeah, and if we're only at 2% and the housing bubble is already imploding.
Oh, yeah.
I mean, if Volcker had to raise rates to 20% back in 1980, and even more recently, I believe it was Greenspan got it up to 5.25%. In 2006, and Trump is now concerned that a decade later, 2% is too fast.
Right, and the pace at which the Fed is raising rates now, they're raising 25 basis points every quarter.
Right.
Greenspan raised them every meeting.
Yeah.
And so they went from 1% back to 5% in a very short period of time. But obviously that didn't work out too well, because we had the financial crisis of 2008. But whenever they talk about let's bring interest rates back to normal, it can't be done, because first you have to bring debt back to normal, which means you have to let a lot of defaults happen, because we have so much debt now that the only way that we can finance it is if interest rates stay at ridiculously low levels. But ultimately, as inflation rears its head, interest rates have to rise.
Right.
And that's what happened when you mentioned, interest rates had to go up to 20%, because that's how far the inflation genie had got out of the bottle. And that's what it took to put her back in. But I mean, we have created a lot more inflation than was created in the 1960s under Lyndon Johnson and Kennedy, and so that all blew up, under Nixon. But this time it could blow up under Trump. But there's just no way at this point to do anything about it. I mean, when inflation hit 4%, Nixon imposed wage and price controls. I mean, we're at 3 now, and it's probably more than that because the numbers aren't honest. I mean, back then, if we were measuring prices the way they did in the 1970s, we'd be already well over 4%.
I think John Williams has it at 10% now.
Yeah, I don't know if it's that high. I mean, but it's probably somewhere between what John Williams thinks and what the government claims. But there's no way the government is right. I mean, there's zero chance that they're being honest about the inflation rate.
Yeah, which makes it curious. On one hand, we have the implicit default just printing away and monetizing it, which seems like there's a good chance of that. On the other hand, Trump having some bankruptcy experience, and I've wondered, because it's on the face of it, there's no easy out. Do you think he would will we have a restructure, or how do you ultimately see this playing out?
Yeah, well, I'll tell you, I mean, obviously he does have a lot of experience with bankruptcies, and that's basically, where we are. We are bankrupt. And so, yeah, I mean, if they did the right thing, we would go and have a meeting with creditors. But basically, our creditors are really not in the position to dictate because the U.S. government doesn't have to pay if it doesn't want to. I mean, you can't force the U.S. government to pay. So really, the creditors are at our mercy as far as what we want to pay. But it's, not just bondholders, I think, that need to take a haircut. It's going to be everybody who has been promised something from the U.S. government.
Right.
And that includes people who are expecting Social Security or government pensions. Everybody has to be told they're not going to get what they expect. Because I think if we simply try to force all the pain on the bondholders, that is also going to have a lot of problems. I think if we at least allow the bondholders to keep something, they're not going to get 100 cents on the dollar, but the pain has to be shared, from everybody who is expecting something from the government. But then we have to, going forward, we have to stop, running these debts. We have to have, balanced budgets, and we have to get the government out of the entitlement business.
Right. Which so far, unfortunately, looks like we're going the opposite direction. In fact, I found it interesting. First 220 years of the country, we had $5 trillion of debt. George Bush doubled that. Obama doubled it again. And even...
So it seems amazing that Trump would be able to double it.
Yeah, and his projections already, they're talking about when we're going to hit 30 trillion, and it's like if this late in the game, there's still nothing coming out of Washington indicating, maybe the exception of Rand Paul, and it seems like he's a lone wolf out there. It's amazing that it still seems like outside of when you ran for Congress.
Well, yeah.
There's no one.
I mean, right now, supposedly times are good and we're at peace, right? And we're running deficits that exceed $1 trillion a year.
Yep.
And so if this is what happens in peaceful prosperity, because that's normally when you would have a surplus or at least you would have a smaller deficit. But if our deficits are this bad now, imagine what happens in the next recession. Or imagine what happens if we get involved in a war. We're going to be looking at deficits that are going to be 2 to 3 trillion a year. Where's that money coming from? Right? There's only one place, and that's the Fed's printing press.
And certainly you've been a central figure in helping to educate people like me and others. Again, you ran for Congress, I guess that was a couple of years ago now.
It was more than that. It was 2010. So it was 8 years ago.
Yeah, well, I remember that clearly. I was listening to the show every day and curious what is next for you. You've done a lot of really impressive things. Again, I'd like to point out to our audience that is your first book, Crash Proof, which I believe was 2006.
Seven.
Laid all of this out before it happened, so not a case of someone saying it later. And given all you've done and you've seen, what is the next step for you?
Well, for me personally, I guess at this point, I'm just going to have to wait and just watch everything unfold. I wrote another book called The Real Crash, which was the most recent one that came out, and that's what I'm still waiting for. 2008 was just the warm-up. I mean, the main event hasn't even happened yet. And for people who thought that 2008 was a big deal, I mean, they ain't seen nothing yet because we didn't really deal with the problems. We were actually able to kick the can down the road. We were able to cover them up with yet a bigger bubble. But this bubble is so big that this is the end of it. I mean, there's no way to reflate a bigger one because there's not enough air. I mean, there's no way the dollar will just implode, and then we end up with massive inflation, which is an even worse crisis. We have a currency crisis, and we have a sovereign debt crisis. Not just mortgage debt that's bad, but government debt that's bad. So we're going to see how this thing plays out. Politically, it could be a huge disaster if it takes place under Trump. So I'm not that optimistic about what is going to happen in 2020. I mean, I think that we could have a real socialist as president with a socialist Congress.
Right.
So it might not be until 2024 where we can start digging our way out of this hole.
Right.
So, things are going to get a lot worse before they hopefully get better. But, I mean, I'm hanging out in Puerto Rico most of the time because that's where I live. So, I mean, hopefully things won't get that bad there because they already got pretty bad. So it's hard to believe it. Puerto Rico could actually be a good place to weather this out because they're used to tough times over there.
Yeah, I hear it's been quite a challenge there, and obviously all these factors leading towards the thesis for gold. Curious as we wrap up, your current thoughts on silver.
Well, I mean, it's hard to be bullish on gold without being bullish on silver.
Right.
I mean, and look at where silver is. I mean, obviously, when you have a bear market in gold, it's even worse for silver. Mm-hmm. So silver, that the pain is magnified, but then so is the gain on the way up. So the people who have been stacking silver, I mean, their day is coming. I mean, prices are going to go a lot higher, and so is the price of gold. I mean, it already should have happened, but just because it hasn't happened doesn't mean it's not going to. Like, bubbles get a lot bigger than you think before they pop. Yes. And in gold and silver, it's the opposite of a bubble, right? So.
Yeah.
And so this bear market has extended for years longer than many people might have believed. But I think ultimately the payoff is going to be that much bigger for the people who have been able to stick it out. Mm-hmm. A lot of people might have thrown away a winning hand. But ultimately, I mean, just take advantage of the prices and keep buying.
Right, and it's like you pointed out with what you wrote about real estate before the crash. I mean, if you saw it in 2005 or 2006, you weren't wrong, maybe just early.
Oh, I saw it. I was warning about the real estate bubble in 2002 and 2003. The minute Greenspan slashed interest rates to 1%, I saw that happening early on. Problem is I was so early, by the time it happened, people thought it was ridiculous. Like, you've been saying this for years. Because when you see these mistakes, you see them way in advance. But, you have to see them in advance because otherwise you can't do anything about it. Otherwise you can't warn anybody about it. There's no way to time it perfectly to just wait until the day before it pops and say, oh, there's a bubble. Because by then it's too late. Mm-hmm. So, I mean, I warn early, but the problem is when you warn early, nobody believes you.
Yes. I remember you talking about going to the family barbecue and they wanted to buy the houses and didn't want to hear it.
Yeah, and then when it finally happens, well, you're just a stop clock.
Right.
That's all, so you can't win.
Well, fortunately, I think there are a lot of folks, I include myself, that really have benefited from all the information and, in my opinion, a lot of the heroic things you've done, because I know it's not always easy to stand up and speak out about that. So, just wrapping up, if you could let folks know about the services you offer and how they can find and reach you.
Yeah, sure. I'm pretty easy to find on the internet. I do a podcast now. I did a daily syndicated talk show for a while. I just gave up on it because I just didn't have the time. But I do these podcasts. You can listen to them at schiffradio.com. Mm-hmm. I also put them up on my YouTube channel, Peter Schiff, and anywhere that you have podcasts, iTunes, Stitcher, wherever it is, you can listen. I usually do 2 or 3 of them a week, maybe 20 minutes to an hour, depending on how much I have to say.
Right.
So you can listen to those. Certainly, you can follow me on Twitter, Facebook, YouTube, all those things. But if you've got some money and you'd like me to manage it for you, I think that's important. A lot of people are going to get wiped out in this crash. In addition to having some money in physical precious metals, which you can buy from me through my company, Schiff Gold. And we've got, probably some of the best prices around as far as low markups over spot, which is what you want. You don't want to get, suckered into overpaying for these collectible coins or, these faux numismatic coins. There's a lot of people trying to, get people to overpay for gold. You don't have to do that. But if you've got a more substantial portfolio and you want to protect it from a dollar crash or U.S. stock market crash. That's what I'm doing. I manage accounts for people at Euro Pacific Capital. My asset management company is Euro Pacific Asset Management. I actually own and run 5 different mutual funds, including a gold fund, by the way, which is not managed by me. It's managed by Adrian Day, who's also here. And as Adrian will tell you, our fund is the #1 fund of all the gold funds for the last 5 years, 3 years, and year to date. So he's doing a great job managing that fund. I mean, you can get a prospectus and check it out. It's got 5 stars by Morningstar. But I've got 4 other funds as well that are not in the precious metals. I invest a lot in overseas markets, a lot of value stocks, a lot of dividend-paying stocks. The whole point is to preserve your wealth and protect your purchasing power. I think most Americans are going to get wiped out. I think most retirees are going to be back in the workforce in 5 or 10 years, maybe sooner. And so if you don't want that to happen to you, if you want to protect the value of what you've worked a lifetime to accumulate, then I think you need to have one of these portfolios. And I'm happy to help people, create one and manage it for them. And so you can go to Euro Pacific Capital's website, europac.com, EUROPAC.com, and get information about my company and contact us.
Yeah, so again, if you didn't like how things went during the last crisis and were caught off guard, I couldn't be more grateful for all you've done and the services you've made available, and really appreciate you coming by.
Thanks.
It's a pleasure to finally meet you
Enjoy
in
New Orleans.
person.
Yeah.
Thank you, sir.
Nobody believes you.
Yes.
I
remember you talking about going to the family barbecue and they wanted to buy the houses and didn't want to hear it.
Yeah, and then when it finally happens, well, you're just a stop clock.
Right.
That's all. So you can't win.
Well, fortunately, I think there are a lot of folks, I include myself, that really have benefited from all the information and, in my opinion, a lot of the heroic things you've done, because I know it's not always easy to stand up and speak out about that. So just wrapping up, if you could let folks know about the services you offer and how they can find and reach you.
Yeah, sure. I'm pretty easy to find on the internet. I do a podcast now. I did a daily syndicated talk show for a while, and I just gave up on it because I just didn't have the time. But I do these podcasts. You can listen to them at schiffradio.com. I also put them up on my YouTube channel, Peter Schiff, and anywhere that you have podcasts, iTunes, Stitcher, wherever it is, you can listen. I usually do 2 or 3 of them a week, maybe 20 minutes to an hour, depending on how much I have to say.
Right.
So you can listen to those. Certainly, you can follow me on Twitter, Facebook, YouTube, all those things. But if you've got some money and you'd like me to manage it for you, I think that's important. A lot of people are going to get wiped out in this crash. In addition to having some money in physical precious metals, which you can buy from me through my company, Schiff Gold. And we've got, probably some of the best prices around as far as low markups over spot, which is what you want. You don't want to get, suckered into overpaying for these collectible coins or, these faux numismatic coins. There's a lot of people trying to, get people to overpay for gold. You don't have to do that. But if you've got a more substantial portfolio and you want to protect it from a dollar crash or U.S. stock market crash, that's what I'm doing. I manage accounts for people at Euro Pacific Capital. My asset management company is Euro Pacific Asset Management. I actually own and run 5 different mutual funds, including a gold fund, by the way, which is not managed by me. It's managed by Adrian Day, who's also here. And as Adrian will tell you, our fund is the #1 fund of all the gold funds for the last 5 years, 3 years, and year to date. So he's doing a great job managing that fund. You can get a prospectus and check it out. It's got 5 stars by Morningstar. But I've got 4 other funds as well that are not in the precious metals. I invest a lot in overseas markets, a lot of value stocks, a lot of dividend-paying stocks. The whole point is to preserve your wealth and protect your purchasing power. I think most Americans are going to get wiped out. I think most retirees are going to be back in the workforce in 5 or 10 years, maybe sooner. And so if you don't want that to happen to you, if you want to protect the value of what you've worked a lifetime to accumulate, then I think you need to have one of these portfolios. And I'm happy to help people, create one and manage it for them. And so you can go to Euro Pacific Capital's website, europac.com, EUROPAC.com, and get information about my company and contact us.
Yeah, so again, if you didn't like how things went during the last crisis and were caught off guard, I couldn't be more grateful for all you've done and the services you've made available, and really appreciate
All right,
you
great.
coming by.
Thanks.
It's a pleasure to
All right,
finally meet
enjoy
you in
New Orleans.
person.
Yeah.
Thank you, sir.
ropac.com and get information about my company and contact us.
Yeah, so again, if you didn't like how things went during the last crisis and were caught off guard, I couldn't be more grateful for all you've done and the services you've made available, and really appreciate
All right,
you
great.
coming by.
Thanks.
It's a pleasure to
All right,
finally meet
enjoy
you
New
in
Orleans.
person.
Yeah.
Thank you, sir.